at about 672. Nikhil Rungta is with us, Co-Chief Investment Officer at LIC Mutual Fund. Nikhil, good afternoon. Great to have you with us here. Nikhil manages the large cap fund, he manages the flexi cap fund, he manages the small cap fund, amongst others. Nikhil, let's just begin a quick kind of sort of snapshot view of what has been the overall stance towards market with the funds that you manage. Have you been aggressive? Have you, as some have pulled back a little bit and are being a little more sort of cautious in terms of the kind of stocks they are picking, or even just the overall stance to begin with, Nikhil?
I'll take you through with earnings. So in our equity market, whenever we discuss earnings, receive very less focus. And if we look at the Nifty earnings, they have been growing at a healthy double-digit growth rate. In fact, if I compare it with last year, our small and mid-cap number was explain the outperformance of our been some amount of catch-up effect, like from 2018 to 22, our small and mid-cap indices have been underperforming large cap, so that's happening. The second focus is on valuation. I believe the large cap and small cap indices are current fair value. What we mean here is median 1 and 2 year forward PE levels of the last 10 years. So contrary to the popular perception, we do not think that the valuation is a key challenge here, especially for the large and small cap segment. Even for mid cap, it's only some 15 to 20% of your constituents, which have a very high multiples, leading to the entire index being at a higher level. So we believe this rising equity allocation by the Indian household since 2016 is a strategic and structural change, and these flows would also continue. Valuations are largely in line with expectations or better than expectations. And lastly, lot of new themes are getting captured in the market now. So these things are definitely there, and we believe that flows are now chasing mid and small cap outpaced. Sectors have surpassed or approaching multiples of large cap. So in the near term, the risk reward for large cap might be favorable compared to the mid and small cap, but this is a market where you focus on quality over momentum, you focus on reasonable valuation over expensive valuation, and you focus on diversified and market discovered prices rather than low floating stock or very, very low holding. So, within a year is anytime given any of the triggers, but we are positioning more toward quality, reasonable valuation, and diversified ownership right now.
Okay, all right. Hi, Nikhil. Good afternoon and good to see you in. This is Nigel on this side. So clearly you're sounding quite bullish. And you believe that maybe the markets are trading at these levels with good reason. Let's focus on a couple of players then. And these stock market related players, some of the exchanges, the depositories, brokerage companies as well, they have done very, very well in the last 12 to around 18 months. But now there's a lot of talk from regulators talking about, trying to slow things down. What's your take on the stock market players? I'm looking at some of your portfolios. I think you'll have BSE that's part of it. But how would you approach these themes? Because clearly the here in India. So your take.
So we definitely are bullish on this financialization theme. And we are bullish depositories. Right now, the broking players, given a lot of regulatory things coming into the picture, we would like some dust to be settled there before venturing into those kind of bullish on the lower potential, specifically the likes of MFI. Of course, this is a time horizon wherein we are seeing some NPS coming up but we believe this is a matter of just a couple of quarters. So we are definitely bullish on this particular theme.
So, Nikhil, hi, good afternoon, Surabhi here. So that's on the capital market related play. Significant exposure to banks, whether it's an HDFC Bank or Kotak or even SBI, Federal. So it's cutting across ownership, private and public, as well as across market capitalization. There, because the naysayers have been really talking about a lot of concern, the fight for deposits, maybe compression in margins, and now maybe we won't get the rate cuts that were earlier being projected and forecast. So how do you put all of this together? And then sort of what's the return expectation that you would have, given that banks have at best been market bigger names?
So as of now, we are playing slightly at a defensive. Banks have been at a higher weight in our portfolio. Our July portfolio is also up on the websites, and if you see that we have cut down our exposure to banks, and we have increased our exposure primarily to the likes of insurance and BFCs, where we see more or better opportunities compared to banks. So we would like to play financials via non-lenders, specifically insurance, and there also fundamentally what we are seeing is more exposures toward NBFCs over banks.
Nikhil, you don't have too much exposure to, for instance, defense, shipbuilding, or even railway. The only stock which I can see across in the key holdings for your portfolio is a Texmaco Rail. So have you intentionally kept away? Have you missed the rally? What is the thought process?
No, so in terms of PSUs, I'll put it this way, like we have good exposure to capital goods and industrial space. If you look at our small cap exposure to capital goods, I'd like to draw your attention primarily to the emerging themes like manufacturing, EVA, some better played or captured in mid and small cap space. And if I talk about large.
Okay, I think we lost.
Toward that thing. Yeah, hello?
Sorry, go on, please. I think we lost the signal. Yeah, go on, please.
Yeah, so specifically in the cap goods and industrial space, we like railway, we like T&D, defense, and engine manufacturers. Theme increase. July portfolio, there are a lot of changes which we'll go through, and would have been answered through my July portfolio.
Nikhil, we'll just stay on. We'll take a final roundup thought from you in a moment. But since you mentioned insurance, and that's where you're increasing exposure, maybe cutting back a little bit from banks, good time to go across to our colleague Yash, because he has been looking at the life insurance data that has come out for the month of July. So let's go over the trends. Yash.
Well, Surabhi, it's been a good. Industry has grown its premium by about 14%. Though in this month, the private life insurance companies slowed down the pace a little bit, growing their premium at about 7%. But if you speak about individual companies, HDFC Life Insurance in the month of July, that is the previous month, showed a very, very strong growth. But there's a little caveat here, and that is that strong growth for HDFC Life has come on a favorable base. So as far as total premium for the company is concerned, that grew at 34%. Total AP grew at 49%. 8%, but do remember last year in the month of July there were these parameters. ICICI Pru Life, it's a moderate growth over a strong base, total premium growing at 7%, total AP growing at 4%, retail AP growing at 40%. Max Life Insurance, to me, as the numbers look for strongest July, total premium growing at 28%, total AP growing at 38%, and retail AP growing at 45%. This comes despite having a strong base. So good month for Max Life Insurance. SBI Life Insurance, it's a weak growth over a strong base. Total AP contracting by 26%, contracting by about 9%. Total premium contracting by 26%. Retail AP contracting by about 21%. Finally, LIC, it's a moderate growth over a weak base. Total premium has grown by 20%. Total AP growing at 14%, and retail AP for the month of July 2024 is flat for LIC.
Okay, all right, Yash, thanks very much. Got that. Nikhil, so final roundup. You mentioned some of the names on the BFSI side. Anything else? Any new ideas that you're liking at the moment?
So we like the consumption, pharma, insurance, and power segment. Discretionary consumption, we believe, is a structural growth opportunity, and many companies in this sector are expected to experience good compounded growth over next decade. Government policies like PLI are encouraging our manufacturing sector, and strategies focused on import substitution and export promotion is leading to these Indian manufacturing rising across the board, and specifically the likes of power, real estate, renewable energy, and water. These themes or rising capex in these segments significantly enhance opportunities across the board, specifically in small and mid-cap space.
Thank you. Great conversation, Nikhil. Look forward to more such. That's Nikhil Rungta from LIC Mutual Fund. Slip into a break. We'll come back and get you a check on what dealing rooms are saying in our segment, D Street Chatter. We also get you calls from our technical experts.